I'll mute myself out then.
Right, so I'm going to get started. I'm going to share my screen. That's not the screen I wanted to share, so hang on a second. Where are we? Just bear with me. Right, can you just confirm you can see my trading view chart for gold on the 15 minutes?
Yes, got you.
Yeah.
Okay. So we'll get started. So for those of you who've not been on my session before, the first thing that I do is I go through the procedure of putting on my 3 lines. So at the risk of boring people who have seen me before, I'm going to do that just now. So we look at yesterday's chart, and these 2 vertical dashed blue lines are defining yesterday's trading period. So this is our area of interest for today. What we do is we put on, just bear with me one second. We use the tool on a free version of TradingView, which if you follow my cursor, I'm looking on this left-hand panel here, and I'm going down to icon number 7. And if I hover over that, it's not doing it for, yes, it's doing it now. It says prediction and measurement tools. I click on that and there's a drop-down menu and you get the fixed range volume profile at the bottom. So if you click on that and then you go to the first candle of yesterday's session, click anywhere, doesn't matter where you click so long as the horizontal line is on the candle. So that's now on the last candle of yesterday's session. Click on that and you'll get this which is what is known as a volume profile fixed range volume profile. And the fixed range that I've chosen is yesterday's session. So 2 things about this. You can see these lines down the left-hand side. These define the volume of activity that's orders placed within yesterday's trading session. You can see that the peak of activity was where this red line is, and that's what we call our point of control. The other thing I need to point out is that some of the lines are in blue and some are in grey. The ones that are in blue define the top 70% of activity yesterday. So that's 70%, and that's where we get our name from, the V70. That's why it was called V70 strategy. That's the 70% of the volume was placed within there, and the other 30% was placed where the grey lines are, and that all of the activity was within that area defined by that blue shaded area. So first of all, we put our 3 lines on, and to do that we put a horizontal ray across the top of the blue line there. We put a second one at the bottom of the blue line there, and then the third one we superimpose on the yesterday's point of control. I've just done those very roughly. What I like to do is to make them a bit more accurate, so I zoom in using that icon there. I just identify the area I want to get in, and you can see that my line was slightly out. So what I do is I just tighten it up, put it to exactly where it should be. I do the same on the other 2. So zoom in on that area there. My line was out again, so I put it in, tighten it up, put it exactly between the blue and the grey, come out, and then on the red line, I need to do it on the crossover. So you can see the line there was slightly out. I'll just tighten it up, put it there. I'm going to change that to red. And there you have your 3 lines. So this, these 2 black lines define what we call the field of play for today. So just coming across to today's chart, this is the today's field of play. And the red line is our yesterday's point of control, which becomes today's target. What I do to help people focus in on that area is I put a couple of labels on, and I've got templates for these. So I put the value area high at the top. I put a second label on here, which is value area low. And I'll put a final one on just to make it absolutely clear. This is our target template. So that was yesterday's POC, which becomes today's target. So we're now focusing on this area here. What I'll do is I'll take a look at the bigger picture. I'm just going through the process that I go through in my own mind when I'm setting these charts up. What I do is I take this off because I've got the 3 lines. So I take this off, and because I've got a paid version of TradingView, I've got access to another tool, which is I've already got it installed. It's here. It's a VPSV, which is a slight variation of what we just used to define this. So I take this off, and if I put VPSV on, what you see is it gives me exactly the same information. I've actually moved that line, didn't I? I clicked on the wrong thing. I would have to put that back on again. But I've actually got the same information as I just got when we started out. But I've also got the benefit of POCs, points of control, from previous days. And it'll become clear in a few minutes why that's important. I just need to go back and put that top line on back on. Where are we? I obviously clicked on the wrong. So again, I'll zoom in just to place it accurately. And come out again. What you can do if you're looking at these charts and you feel, I've just moved it again. I was just going to say what you can do. Just put it in exactly the right spot. If you click on the line, you can actually lock that line into place, so you can't make the mistake I just made then. So I'm going to do that, and I don't repeat that mistake. So those 3 lines are now locked. No, they're not. This is all good practice. So this needs to be a red line, and zoom back in. What I need to do is move that forward there. Okay, and if I lock that before I come out, then those are now fixed there. So as I was saying, the advantage of the paid version of TradingView is you get this VPSV, which shows you previous points of control. So just to go through them, we've got today's point of control, which is that blue line at the bottom. You've got yesterday's point of control, which is today's target there. And then above that, you've got Monday's point of control, which is still outstanding. Now, the important thing to say about those is these outstanding points of control, which sometimes are called verging points of control because they haven't been taken out yet. The price tends to be attracted to these, and you'll find that as in the same way that imbalance is an area where price needs to go back to at some point, although we don't know when, these points of control act in the same way. So just to look at the big picture, we're looking backwards. That is the only outstanding point of control. And I won't waste time going all the way back, but even if I went back to a full year, you would find there were no further outstanding points of control there above the current price. Now, I'm going to look at the 1 hour chart and get a really big picture. You'll notice that we've now got more outstanding points of control, and these are going back to that one was the 11th of February 22, but they're still outstanding, and price has to go back and take out those points of control at some point. We don't know when, but they will go back, and that's why if you look further back, they've all been taken out at some point. So all of these points of control have been taken out, so they've disappeared from the screen. They stay on the screen when they're waiting to be taken out. So that's the first thing I do when I look at the chart. I look at the big picture and see where today's price is in relationship to where it has been. Now, the other thing to stress is I've got a purple line up here, 2075.21. That is the previous highest high. That dates back to the 6th of August, 2020. Price has never been above that level. If we zoom in, we'll see that a few days ago, it almost made it. It got up to 2069. So it was not very far short, but it got up to that point and then it turned back down. And that is also, if you zoom in, that was that point there was when we went from being in an upward trend, a very strong upward trend. We reached that point, and since then we've been in a very strong downward trend. So there's a big picture. Now let's have a look at, I'll revert back to the 15-minute chart and I'll go through my thought process when I look at this chart first thing in the morning. First thing I see is that today's price is within our value area. So remember, this is the value areas between these two black lines. What I like to do, just as a focus, just as a visual focus, I put a little rectangle on there, and then I stretch it out. So that's just focusing my eye on today's field of play. So now the current price within the last half hour or so has actually come to within our field of play. Now the 3-line strategy is all about taking reasonably safe trades. Once price comes into the value area, once it comes into the field of play, taking trades from that point up to the target. I say that those are reasonably safe trades because this POC is acting like a magnet. So we need to be thinking about getting in for a buy now, but that is not sufficient for me to jump in. I do have 3 other things that I look for before I get into trade. The first thing is I put on the Ninja Matrix. And what that tells me is the Ninja Matrix is still in a sell mode. It's still saying we're in a selling stage. So that box hasn't been ticked. I would want this pink area to turn to green. As we've got the Ninja Matrix down there, we're looking for a Ninja Matrix up before I would consider getting into a trade. The second thing I would look for, I'll put the Ninjacator on, and just zoom in a little bit. You can see we've got a Ninja up, and price is actually moving up as we speak. What I'll do is I'll put the Heikin Ashi candles on, because the Ninjacator is designed to work on the Heikin Ashi candles. If you see Ninja ups and Ninja down on normal candles, that could be a bit of a false reading. It's always best to check on Heikin Ashi candles. As it happens, they corresponded with each other on that occasion. So I've got one of my tick boxes checked, and the other one so far has not been checked. We're waiting for a Ninja Matrix up. Now, the third thing I look for is the moving averages. And as you can see, the moving averages is a yellow line, the red line, which has just turned to green, and the orange line. So the yellow line is the 5 moving average. The red line that just turned to green is the 13 moving average, and the orange is the 20 moving average. Now, for me to get into a trade, I'm looking for the 5 to have crossed over and be above, if we're looking for a buy, to be above the 13 MA. Now, so that one has actually ticked a box for me. I'm just waiting for one outstanding move, and that is for the Ninja Matrix signal to go from red to green. There's another bit of a confirmation, which is additional confirmation, that is that the PSAR has actually come down to below the price. So we're in a reasonably strong situation for a buy, but I wouldn't get in until this Ninja Matrix changes, for the simple reason that until it does change, there's every chance that yellow moving average will creep back below the 13. Now, what I do is I normally check my settings on the Ninja Matrix, and this is a good time to check them. If I'm actually on the 15-minute time chart at the minute, and for the 15-minute, I need to be on the 1-hour matrix time frame. So that's working okay. If I change to the 5-minute time chart, you'll see that we've got the conditions that are now satisfying my checklist. We've got a Ninja Matrix up, we've got a Ninjacator up, we've got the yellow 5 MA above the 13 MA. So if you want to trade on the 5-minute, fill your boots. There's a potential trade. But I would need to check that the Ninja Matrix is the correct setting for the 5-minute, and it needs to be on 30 minutes. So we'll just change that. It doesn't make any difference to the current situation. So if you're trading on the 5-minute chart, you're good to go for a buy. I prefer to trade on the 15-minute chart. I'm a little bit more careful. And here we are, look, we've got we need to change the setting, Ninja Matrix. So you see the Ninja Matrix has changed to green, but that's possibly because we're looking at a 30-minute chart. If we revert back to the 1 hour, we're still red. So it's a question of choice, really. Do you want to get in at this point, or do you want to be safer and wait until the matrix changes? But my personal choice is I wait until it changes. And I'm going to explain a little bit more, because I know some of you will be thinking, well, why don't you get in, Richard? It's looking good. So what I haven't covered yet is potential targets. And we've already pointed out that this POC, which is yesterday's POC, is today's target. So we're looking at taking a buy from where price is now, which is roughly there, up to that point there, which is 63 pips, not to be sniffed at. And why am I not getting into a trade? I can hear you all asking. Well, there's a very good reason why I'm not getting into trade, and that's this blue line here, which is today's point of control. Now, we tend to disregard today's point of control, but we do so at your own risk, because this is where a lot of today's trades have been placed. Both buyers and sellers have been placing trades at that point. So that's 1920.65. It's an important area to today's traders, and the price may well head up towards towards today's target, but it may well get stuck at that point there. And in fact, we've got an opportunity to watch what happens. It's wicked up towards it and it's rejected it. And it is actually a potential reversal point. Price could actually bounce off that and come back down. So my thoughts on this are, we wait and see. I would want to see price get above that line at today's POC before I will get into a trade. Not because, well, for the simple reason that if I get into the trade now, I've got a potential of getting drawdown. It could bounce off a couple of times. It could bounce off all day. We don't know. I want to avoid getting in drawdown, so I'm going to get into this trade when it gets above that line. So I'm sort of putting a sort of additional caution on this strategy. The basic strategy is you take buys from the value area low, or the extreme of the value area, up to the target, but be careful, because that line is a potential reversal zone. So we're looking at that line as being a significant point. We're looking at this red line as being a significant target. There are two other potential targets, because if you stray slightly off the three-line strategy, you might be tempted, if price breaks through this red line, that you might spot an opportunity to take a buy further up to the value area high. Now, I will take those trades once price is broken. And what I wait for is, if I take this trade up to this target, I'll get out of the trade at the target, because again, we have potential for this price to bounce off and take its time, and maybe bounce off a couple of times before breaking through and starting its way back up. So what I would wait in both these situations, I would wait until a candle had closed above that line and above that line. I'm just being ultra cautious, but that's how I tend to win more trades than I lose, and I avoid a lot of drawdown. So we've got this is a potential. This would have been, if we got in a bit earlier, that would have been a potential target. This is our next potential target once it breaks through that line. And then there's a potential third target, which is a value area high, or somewhere in between this target and the value area high. Now let's have a look and see where else it might pause. I look left and I look at yesterday's volume profile, and you see that the peak of the volume activity was at that red line there, which is indicated, but there's another peak there, just above it, and below it, it tends to fall back. Now, it may be that price will be attracted, once it's reached that POC there, it may be attracted to go up to this second peak and pause there. So there's another potential target. It may stall there and then it may go on up to fill this, up to the edge. Now I'm looking at another interesting area. Follow my cursor. Look at this volume profile. Let's zoom in on it. See where the blue lines turn to grey. We're leaving the V70 area and we're going into the V30. Well, we call that the V30 area. This is the V70. Could be called the V30 area. Look at what's happened once you get to the top of this value area high. There is almost no volume whatsoever in that area there. And I'm going to steal one of Paul's phrases here. This is an area of imbalance. And we can check that because we can look at the candles, and they from you see where
You need to be back on order because you're on high Kanashi, Richard. You need to be back on order.
Okay, thanks for that.
No, that's all right.
I have a habit of forgetting to turn those off.
How do you think I need to remind you? I do the same.
Right. Oh, well, that actually improves my viewpoint there. So we're looking at this area here, and you see that there's a green candle here where there's a wick. There's a wick, and then below that there's nothing until you get down to, there's a very tiny wick at the top of this red candle here. So between that top of that wick and the bottom of that wick is what we could call imbalance. The way I'm looking at it slightly differently. I'm looking at this area of being an area of inactivity. There have been no trades placed, and yet there was a strong move. And that's a sign of manipulation. The banks have moved price down there from that level there down to that level. They've moved it really quickly to suit their purposes. So we need to bear that in mind, because that is an area that's going to attract price. Price will need to come in and fill that gap at some point. Again, we don't know when. And similarly, there's a very tiny sliver of imbalance there. You see where my cursor is, and another one up there. So we need to be aware that price is not necessarily going to, if we're looking at this blue line as being, this is an outstanding point of control from a few days ago. I've got my eye on that as a potential target. But I know for a fact it's not going to go from where it is up to that point without a few stop-offs. It's going to take its time. It's going to, I'm just looking to see what the current situation, things have moved on since we last looked at it. Look, we've now got, we've now moved into the value area, and we've gone past. Well, actually, I think what's happened is that this point of control has changed. I think when we were looking at this before, it was a little bit higher. It's actually moved down. So this is one of the reasons why people tend to disregard today's point of control, because it's developing all of the time and it can move. But I think it has moved. I didn't mark it, but I think it was definitely a little bit higher than that. But so
it was higher, Richard.
Sorry?
It has moved. It has moved.
It has moved.
Higher.
Good.
Yes, it has.
All right. Okay. So we're now in a slightly changed position, because prices has sort of passed that potential point of reversal. That was a potential point of reversal. It's now gone beyond that. So we're now looking good for a buy, except we've still got this red Ninja Matrix. And again, if I go back to the 5 minute to confirm we're on green, but you see why I was right to be cautious. In the previous 5 minutes, it was, well, at this point, it was looking good for a buy. At that point, it was starting to think about it. We had a long wick up and a long wick down, and then we had a reversal candle. So we would have been in drawdown had we jumped into that trade 10 minutes ago. So my strategy works because I'm ultra cautious, and I'm not jumping into this until we've got a green matrix background on the 15 minute. You might think I'm losing a few pips, but I'm also avoiding drawdown. Look at this massive wick. It went up and then it came back down. Another massive wick up, come back down. It's playing with us. It's trying to trick us into taking a trade, and I, for one, I'm not going to take one just yet. So whilst we're waiting for this to make its move, I mean, just as an additional thought in my thought process, what I would do, I've got if you go to Trendline Tools, which is the second icon down, and click on that, if you get a parallel channel and you put it, it doesn't need to be strictly accurate, but put it sort of the top of that wick there. Need to get rid of that. Trendline Tools, parallel channel. Let's just put a parallel channel on, let's say from there. Let's say this doesn't need to be strictly accurate. It's just a bit of a guide. So there's an area where price has been bouncing around in consolidation. Or if you like, it's an area of accumulation where people are sort of reinforcing their positions. It may be that buyers are taking more and more. It would be helpful if that was horizontal, but I'm just doing this as a simple idea, because what you could do is you could instead of sitting and watching this for however long it takes, you could actually set an alarm on this channel, and you could ask it to let you know, set an alarm when price exits the channel. I put it on once per bar, and as soon as it exits that channel, if it gets out the top there, or if it comes out the bottom, I'll get an alert. So I can go and make my breakfast now and just wait till that alert turns up. And basically what I'm saying is I'm really not interested in getting into a buy until we've got a sign that it's moving out of this consolidation. So what I want to do is look at other potentials. So we move to the 1 hour chart, and well, let's go to the daily chart. No, it's not. Oh, there we go. By moving to the daily chart, what I've got is some other outstanding points of control, but this time they're below the current price. So we've looked at this one as being a potential target if price decides to go upwards, and now we've got potential targets if price decides to go downwards. There's an outstanding point of control from the 25th of February. There's one from a few days earlier, the 15th of February, then there's 2 or 3 others. But the main one to look for is the first one. So we've now got potential targets if price goes up, and we've got potential targets if price goes down. I bear those in mind, and it might be a good idea to maybe put a horizontal ray on this and just say, you know, Instead of making that a solid line, we'll make it a dashed line, and same up there. You could mark that just roughly, and those are a couple of other targets that we could aim for. So we go back to the 15-minute chart. There we go. So we've got another potential area of interest. I'll just reset that chart. There we go. So, for some reason, it's disappeared off there, but no, you get the idea. What I'm doing is I'm trying to focus my eye on where price might go next, and that was one of them. And there was an additional one below. I think it was 1888, 1887, roughly. That one's there. So I'm trying to put it in the context of the big picture. Put that on there. There we go. So we've now got sort of an extended field of play, not necessarily for today, but possibly for later in the week. If price ends up here, it might be going up there. And if price starts to come down, it might be going down there. So that's just something to bear in mind. And all we can do now is sit and wait. I've set an alarm, so I can go and make some breakfast and come back and reassess. By the way, when I get the alarm, if price pops out, I don't necessarily jump in. What I do is I reassess the situation and take a new view. That's my. I was trying to move that. This is why you should always lock things that you are marking up on your chart, because you can move them accidentally. Right, so we can't go any further until that price decides to move. Now, something to bear in mind is today is quite an important day news-wise. We've got at there are two things I'll mention. One is 12:30. There's some news highlighted there, and that basically is the opening of New York. Now, we normally talk about New York opening at 1:30, but because they've changed their clocks for summertime, they're currently 4 hours behind us, not 5 hours behind us. So 12:30 is when there's a potential for a big move, purely and simply because the markets have opened, and there's a little bit of low level of news, but not the highest level of news. That comes at 6 o'clock this evening. There's red flag news at 6 o'clock, and that's the US interest rate decision. So we need to be aware that this consolidation may well go on for quite a while, because people will be reluctant to get in to investing money until that decision has been announced. So we may be in for a quiet day, but at least the price is within our field of play. Yesterday, it never even went anywhere near it. This was yesterday's point of control, and yesterday's price was way down here. We never even approached getting into the field of play. It was a really tricky day yesterday. I did manage to get some pips, but they weren't the simplest of pips to get. So we're in a reasonable position. We're in the field of play. We just need price to make its mind up, pop its head out of that box one way or the other. I'm biased towards a buy, but I'm waiting for the Ninja Matrix to make its move. Just to double check on the 5 minute. Yeah, we've still got a green matrix on the 5 minute. But you know, the reason there is a reason that this red matrix is staying red, and that is that other indicators are signaling a sell rather than a buy. I'm going to look at a couple of final indicators that I use sometimes. see if that gives us any clues. And I've got the multi-time frame stochastic, and I've got the AO MACD, and I use those as sort of additional confirmation. So let's look at the AO MACD first. This purple line is the 0 line, and generally, if price is below that line, we're looking at sells, and if price moves above it, we're looking at buys. That's a massive simplification, but that tends to be how it works. You'll see we've got a green dot which is indicating a buy, but it's stayed below the 0 line, and it's not moving a great deal. It's simply flatlining, pretty much the same as the price. And then the multi-time frame, I'll zoom in on that to make a point, and it's so we've got the 4 hour, which is in the extreme down at the bottom. We've got the 1 hour, which is fairly close to the extreme, but sort of leveling off rather than pointing upwards or downwards. So we've got the 30-minute, which is sort of undecided. It's neither going up nor down. And then you've got the 15-minute, which is heading towards the top extreme. So we've got a bit of conflicting information there, because when that gets in above that red line, it's possible it'll turn back down and go for a sell. But, you know, we've got this lockdown at the bottom, possibly going for a buy. So we've got conflicting information. We'll go on the 5-minute. The 5 minutes already in the extreme. So we've got red here saying it's possibly going to turn downwards. The green one's not far. That's the 15-minute, is not far off the top. So we've got conflicting information. So beware is how I would sum that up. It's
to me, it's like the markets are sort of clenching the backside, isn't it, Richard? Everything seems consolidating and slow.
Yeah, it's. I mean, it's just a time to be patient. You can't force the market. You just got to go with the flow. And at the minute, it's not giving us any strong indication. 5 minute is saying by 15 minute now seems to have changed. It's just now changed. So yeah, we might be going to get some movement. So let me just sort of summarize my thoughts on that current position. We've now got a Ninja Matrix up, which is box number 1 ticked on my checklist. We've had a Ninja. If we change to Heiken Ashi, we've got a Ninja up. We had it a few candles. So there was the Ninja up, there's the Ninja Matrix up, and the yellow 5 moving average is above the green 13 moving average. So those are all positive buying signals. So what do we do? Do we take a buy? I mean, all of my boxes have been ticked, but I have a doubt. And the doubt is because of the multi-time frame is conflicting. This is moving towards the 0, but it's not above the 0. I'm going to be cautious and not get into this right now. I'll get rid of the Heiken Ashis before I forget. Yeah, you know, we've now got a red candle. Has anybody else noticed that when you get a change of Ninja Matrix, as we've got there from red to green, the first candle tends to contradict the change? How many times has that happened? Does anybody else notice it? It's going to make a liar out of me, but that first candle quite often indicates the opposite to what the Ninja Matrix is saying.
The
I've
matrix,
definitely noticed that. Yeah.
the matrix works on higher time frames, and of course the thing with indicators is, and it also works on closer candles. So you've had 1, 2, 3, 4 green candles there.
Yes.
So the Ninja Matrix is looking back over a bigger time frame and going, oh yeah, it's a buy.
Yeah.
But what happens if you go and run very fast, like you know, in a race, you get tired, don't you? And you want to pull back and that's what the market does. It's had a push up, now it's having a little rest and a pullback.
Yeah.
But the matrix is based on the bigger picture. So that's why, to be honest with you, the matrix works brilliantly on gold. I hardly ever use it on Forex pairs now, hardly ever.
Right.
But on gold I do, but then I don't trade gold very much. So
I do, as I said, just gone through my sort of three box checklist. I use the matrix as one of the major.
Yeah, it's good. Yeah, it's good on gold.
Okay, so we can't do any more on this. We've just got to wait until it makes a decision. It's still in consolidation. You look at this area here; it's just bouncing around backwards and forwards. And because of the interest rate decision later today, I think there's potential for it to carry on doing that for a long time. There's something I wanted to just show you, which you may have seen already, but see if I can, if I stop sharing the screen, and if I can, not sure if I can move everybody out of the way. No, I can't do that. I was wanting to show you the Nash position size indicator. Now, let me just how do I move you out of the way and get, yes, I think I can do it.
The black bar at the top of the videos.
There we go. So can you now see the Nash markets?
Yeah,
Yep, sure can.
Right, okay. I just wanted to run through it because I posted this last week sometime, but I've never mentioned it on any of my sessions. One of the things that I've been doing is working on extending my strategy away, well, to do other indices in addition to gold. But one of the problems that I had was that they've all got slight variations in terms of lot size and value of a pip and what have you. So I came across this, which was the Nash Markets position size calculator, which is exactly the same as the one that we use on MyFXBook. But MyFXBook doesn't include anything on indices or oil. It does include gold and silver, which is why I decided to start trading gold. But this one now gives me the opportunity to extend my trading into other indices. And I just want to run through it very quickly. Just take 5 minutes. It's fairly simple. Well, the first thing is it starts when it comes out of the box. It's working in US dollars, and my trading account is in British pounds. So if you click on, I'll just show you that again. The little hamburger thing in the top left-hand corner. Click on that. It will bring you this, and then you can go to settings, and you can change the currency. I changed mine to British pounds. You can leave it on US dollars or change it to whatever you want. So I'm now working on pounds, and let's say I've got a £20,000 account balance, and my leverage, and this is the other useful thing about it. If you check on your MT4 or whatever platform you're using, just check what your leverage is with your broker, and you can alter this. So my leverage is 100 to 1. And this is what I like about this calculator. You can change all the variables. So you can put in, if you want 0.5%, it tells you that means you're going to be risking £100. You could have done it the other way around and entered £100 and it would tell you it was 0.5%. The asset class, if you select that, it gives you a choice of cryptos, energies, EU shares, Forex, and indices, metals, and US shares. So let's go to an indice, and then you select which one you're working on. So you've got US 30, UK 100, SPX, NAS, Japan, German, France. So those are all the ones that Jeff works on. 1, 2, 3, 4, 5, 6, 7. Those are 8 indices that Jeff works on. Then there are 2 metals, and then there are 2. I think there's 1 energy. I think he does US oil as well. So all of Jeff's indices are covered in this position size calculator. So if I choose NAS 100, it gives me the current price. You need to refresh that just to make sure it's bang up to date. So I'm now working on NAS 100. I'm looking for a 0.5% risk, and I know my entry price. I don't know why it asks you to define long or short. Well, yes, I do know why. So let's say I'm going for a buy, and then there are three. You only need to enter one of these variables. So if you want, what I do is I enter the number of pips. So if I'm prepared to risk 10 pips, I just put 10 pips in there, ignore those. It already tells me what my stop loss price will be. If my stop loss is 10 pips, it also works it out in percentage terms as well. So calculate position size, and it says your position size is 1.3. And that works, as far as I can see, on all of the indices that Jeff uses, and metals and energies. So I just thought it was a fantastic new addition to our armory. Well, I'll go through that again with some different variables. Let's say different amount. With let's take it the other way. Let's call it. Let's say you've got a £200 account on a 100-to-1 leverage. You want to risk 1%, so you're risking £2. I think I know what the answer will be on this, but never mind. Let's say we're going for a long and we're risking 10 pips, and I think I know what the answer will be. Whoops, you can't take it, you need more leverage. So that's another tool that you can use, because basically what it's saying is you ain't got enough money to take that trade. You need to either increase your leverage, or you need to increase your bank size, or you need to reduce your risk. Let's try putting that in at 0.5%. So I'm going to risk £1. I'm going to go along and see what happens. I've got a feeling it'll be the same. Oh no, it's saying, yeah. So if I reduce my risk, it says you can go in for a 0.01. So I just thought it's a handy addition to our armory.
I'll stick that in the guides. Yeah, it's good.
It certainly takes the headaches out of calculating your lot size when you're trying to enter a trade in a bit of a hurry, and you've got each indices has got a different value, and this is ideal because it takes into account your leverage. So I'll return back to my gold chart and see if anything's happened. Yeah, we're still heading upwards, but in my mind, not sufficiently to get me too excited at the minute. It's looking like I'm going to be waiting until it gets out of that box, and by which time it'll probably be too close to my target for me to get in. So, it is what it is. It's we're in a bit of a danger area here because it could quite easily reverse, and we've got to assess it when the situation changes. So unless there are any further questions, I'm more or less bang on time for a change. Any further questions, I'm happy to answer.
I just want to say I think that was brilliant, Richard. Thank you. Really good.
Thank you very much.
Lovely.
Okay.
Definitely agree.
I'm going to, I have recorded this, so I will at some point put it in my YouTube channel if anybody wants to look back on it. But of course, it is also in the Facebook group anyway, so you don't need to go searching for it. So thanks for jumping on. If anything changes later today, I've got a pretty busy schedule today, but if I see anything, I'll just drop a post in or maybe jump on for 5 minutes and outline what I
Is
see.
that you down the pub again? Is that you down the pub again with the dog? Is it your busy schedule?
Well, yeah, I've got I dog sit for my mate, and he's lying next to me, and he's in the habit of dragging me into the pub
Oh, right, yeah.
when we're on a walk. So,
Must be tough.
Yes.
but
Poor bastard.
I do sometimes escape and do like a quick 5-minute session if I see anything emerging on the charts. So thanks for jumping on. I'll see you next time.
Thanks, Richard.
Cheers.
Cheers. Bye.
Bye now.